most people in business aren't focused on the other things, right? It doesn't mean obsess about your competitors and what they're doing, but try and find these spots, right?
Hello, everyone. Welcome to another episode of Test, Optimize, and Scale. I've been looking forward to today's conversation with Chris Van Dusen, Senior Partner, Solyco Capital, also serves as Chief Growth Officer, and has had 3 exits. We're going to get deep into the world of private equity here. Going to be talking investments, going to be talking about what it takes for a brand to grow, for a brand to thrive. Chris, thanks for taking the time to join the podcast here.
Thanks for having me, man. Really excited about it. I've been looking forward to this as well.
Awesome. And you have an awesome background, a standout story. Thought we could begin with your path into this world of private equity. Where did it all begin for you?
Yeah, absolutely. So I like to say I had this very non-linear path into finance, right? So played baseball at fairly high level, grew up in the Northeast, went to college in Virginia at the College of William and Mary. Got hurt while I was there. So funny part is they can't kick you out of college even if you get hurt. So I got to get a degree in economics from a great university. Started my career in sales and kind of worked over to finance, but was on the sales side of finance. Was what they call a wholesaler. So selling financial products, typically through the RIA and broker-dealer channel.
Right.
Had the opportunity to come to, you know that one?
Oh, yeah.
Yeah. So it's a fun world, man. Great products. I was in the Reg D space, right? Which is kind of these private products that we were doing. It was worth a real estate investment banking firm. And had the opportunity to come out to California. One of our large clients was out here. And unfortunately, this was 2009. So You're talking about this time where, as I said, real estate investment banking, we're just out or really kind of still in the crisis. So there weren't a lot of great real estate jobs. But I came out to California. The company fell into some hardship about 75 days after I moved here. So the funny part is you either figure it out or you call yourself unemployed. So I started a consulting firm, but I like to call it this like accidental entrepreneur. It wasn't what I was trying to do, right? You could also call it a forced entrepreneur, meaning you got to pay your rent. But we started a consulting firm. I met my wife about 4 months after I moved here. We started our first company together 4 months into dating. And
Wow.
We've been at it ever since, right? It's been amazing. But I was fascinated by how finance and marketing came together. And when I met my wife, she was doing business development marketing at a big international law firm. I started working with some startups in the consulting firm we had. And again, with this intersection of finance and marketing. And she started an agency in 2013. I started mine in 2015 after going in-house as director of digital at an agency for a few years. And what I found was at that time, we talk about it now in 2005, but in 2015, I hate to use the term growth hacking, but I'll use it more around conversion rate optimization, high intent media buying, understanding, the reel and the rod if we're talking fishing, but also how the net impacts scale and growth from a cost perspective. And so we built this agency all around that. And so we scaled a lot of different brands in the consumer space, did a lot of B&B lead generation. It was a great, fun time. And so I did that in 15 and 16. 2017, I met these few individuals who had just started a CBD brand. And there were 6 of us total. I joined, I was the last one kind of to come on. And the 6 of us over a 2-year period scaled that business into 17 countries, 120 employees. It was massive. We ended up being the 2nd largest CBD brand in the world. And it was funny because, we're going to talk about this today, but I didn't know what I didn't know. So I knew how to move products online. That's what I had been doing for everyone else.
Right.
And so now, as they always say, eat your own dog food. I'm in eating my own dog food, doing the strategies I've been recommending for years. And we scaled this business very quickly. And it was wonderful. At the same time, my wife and I co-founded a liquor distillery in Huntington Beach that we took full cycle. And then we did a beauty care brand in 2019. But the last exit that I had was in 2021 in August, which was the CBD brand. We ended up selling that to a publicly traded company. It was a great exit. It was a ton of fun. I didn't stay on. I actually kind of transitioned out of the business at that point in August after the sale. And, back in 2017, I met this gentleman by the name of John Garcia. We joined this group called Alder together. And Alder's all around generational leadership, think about living your legacy today, not waiting till you retire or you get old, right? And love the ethos of the firm he created, and he's founded in 2017. And when he was building that, I was doing all this other crazy stuff. They were an investor in one of the deals. We took full cycle, and I had the opportunity to join in January of 22. So there's typically in this world, and not one shoe fits all, right? Not one size fits all, but there's typically two paths. You're either kind of come out of school, get your MBA, go be an analyst, start working in investment bank, understand investing, start working in private equity or venture, and you kind of just work your way up, right? The other way is to go get your teeth kicked in every day as an entrepreneur and go do it, right?
Yes.
And so I ended up doing that path. But along the way, as I mentioned, we had been raising capital for some of the deals. I had been actively investing in deals. A friend of mine from college, we raised two funds in the cannabis space around what I'll call picks and shovels. So think ERP systems, analytics companies. And when you look at the role of a venture partner or a role of someone, in the world that I play in now, you typically have to have a few things, right? You have to understand deal structure. You have to understand companies' ability to grow. You need to be able to do diligence at the first level before you bring in your full team. You need to understand large market dynamics and how things work. You have to be able to raise capital. And you could say, yeah, there's people for all of those things, but especially in a mid-market firm like ours, it's really the partner's responsibility to be able to do all those things meaningfully. And I've been doing those through the bulk of my career, if you will, after I came to California, both by force as an entrepreneur and by pleasure as an investor, and by someone who's loved looking at deals and hearing the entrepreneurial spirit and story for growth. And so, joined them in January of 22, and I've been doing this ever since. It's the last 3 years. It's been an amazing ride. We've invested in some great companies, helped many other companies grow, within their life cycle, further along with follow-on rounds, and it's been extremely rewarding and amazing.
Sounds like it. They say self-actualization, and it seems like you found the right fit for you. I played baseball growing up. I felt like I was along that path there with you. Not at the levels of competition that you were, but understand injury, economics. Hey, now I'm getting into the world of finance marketing. That's what we do as an agency. A lot of investment crowdfunding campaigns, but sharpened our teeth with Reg D 506C and using ad tech, using content funnels, that net you're talking about, getting investors through, and being able to work with great companies along the way and really storytell. It's really great to hear you were effective at, like you said, eating your own dog food and taking your own medicine, being able to launch the CBD company, liquor distillery, everything that you guys were able to do full cycle. And then it sounds like the exit, over 120 employees, changed everything for you on the CBD project, and that you were able to get out. I hope to do things like that one day. So very much look up to you and want to know more about some of the moving pieces that got it there, some of the scaling aspects, and understand you're investing along the way. And now you and your partners are able to look at the right deals, what you want to associate yourselves with. Sounds like where you want to have an impact and be able to grow those organizations with capital and with the right guidance.
Yeah, I think you're spot on. So, I'm not going to sit here and speak poorly of the venture industry, but traditionally how it works, right? If we look at the majority of it, you go raise a large fund, and then you sit and you make decisions on what matches a mandate or matches a thesis against that fund, right? And you're going to go make capital placements. But traditionally, most venture firms are small. And so they only have so much from a resource perspective they can push towards helping scale. And it's inherent in the model. So you might raise a couple $100 million, but you might have two GPs, right, who run the fund, some admin staff, some analysts, maybe a biz dev person, right? Because the majority of how you're making your dollars as a firm come off the management fees, right? What you're charging each year on an override.
Right.
For us, we looked a little different, and our deals are structured differently. But really, we have 11 partners, and a good portion of those partners and the majority of our staff, which is about 40 now, are in company. We call it on secondment, working within a lot of these early stage portfolio companies. Now, it's not mandatory, but what you find is a lot of these companies do want help scaling. They do want help with business development and partnerships. They want great new people to meet. And that's part of the difference between capital and smart capital a lot of times is what can those dollars and the people behind them actually do to help you? And so there's other operators like myself who are on, as senior partners or part of our team. And so they're able to come in and bring this past expertise to help scale these companies. Because most, and for us, we traditionally stay in the seed to B range, right? If we're going to play alphabet soup with where we invest. But when you're looking at an early stage seed, they're not going to have a fully baked management team, right? Not all roles are hired for. That's why they're raising capital, right? The combination of that of OpEx and CapEx. And so when they're looking at hiring these talented people, it could take time. Well, we can have people in there speeding that up, right? Because speed's that one thing that's really important, especially for early stage companies. And so we're in there helping drive those efficiencies early on behalf of certainly the underlying company. And it helps us really kind of push those dollars we have as a firm, that we've deployed as a firm further within these companies.
You're giving them the cheat codes along with capital.
Correct.
You've been down this path. You're able to tell them about pitfalls. You're able to tell them about shortcuts. You're able to leverage your networks. I hear 11 partners. I can only imagine how many people you guys know collectively and the quality of those relationships. You're able to connect some dots there. And that makes all the world of difference. Like you said, time's really the most important resource here.
Correct. Sometimes it's saying, hey, we should look around the corner a little bit differently. And sometimes it's just telling a story about the scars that are inherently baked in from having gone through it, right?
Yeah.
Either way, there's lessons learned. And, it doesn't mean you're right all the time, but it means, hey, I've seen this show before. Mm-hmm. Here's what could be coming. And that light may be an opening. It may also be a train. Let's watch out and let's have some conversations around it.
Absolutely. And it's all a matter of how you word it, right? You don't want to go in there and say, this is definitely what's happening, as much as getting this sense, getting this feeling from my past experiences, from the market conditions, from our due diligence. It sounds like we need to be keeping an eye out for this.
Yeah. And a great one I'll mention just because, I think it's extremely important, and it's a problem or fallacy that a lot of startup founders have, which is, yes, your product, solution, service, name it, can do a lot for many. But who is it going to do the best for today? How do we create an amazing kind of really, really deep relationship there or access there, right? You call it the difference between going a mile deep and an inch wide versus an inch deep and a mile wide.
Right.
Because traditionally time, very valuable, as we just talked about. But the other finite thing is capital around strategy. So, if there's 5 acceptable verticals your product, service, whatever it might be, could go.
Yep.
You can't be an expert at all 5 off the bat. So where is that place that you can go deep, prove a model, and then maybe expand to a second? Mm. What a lot of teams, a lot of founders don't realize is, as you're looking at different markets, you also have different, what I'll call an education chasm, to get them to understand the true market. They got to cross. So does your potential customer back to understand why your product, service, whatever is best for them today. You have to learn how long contracts last. You have to learn why people say no to certain things. How hard are the incumbents to remove? And these things are typically not done at the level of diligence across 5, 6, 10 different industries as they are. I solved this one thing for healthcare and I'm gonna start there, right? And so, I think it's important that whole really focus on where you can plant a flag and go real deep and be excellent, because you can take those learnings and be able to then expand it out to each individual market vertical, instead of saying, no, it'll work in all 5. And then you're making the same mistake 5 times across 5 different industries, right?
And taking on much less market share in each of those 5 industries. It's better to really own that one space, do well, be able to take the resources, the learnings onto the next vertical and onward from there, and really, really just make a mark in each one of those one at a time.
You got it.
Yeah. So from the world of CBD, starting a company, getting up to 120 employees, full cycle, What do you point at the most from that experience when you're talking to companies now? What did you really absorb and ingrain that you're able to continue to package and repeat for the next founders? What was the most valuable experience you got from that chapter?
Yeah, so there's two big ones, right? And again, I was sitting in the chief revenue officer seat, right? So it was inherently my responsibility to help scale this company more than anything, right?
Right.
Wasn't necessarily mine to work on COGS or, work on our corporate strategy team, but it was really, okay, how do we get this in the hands of as many people possible? What no one wanted to accept, and at the early stages, I would argue it really wasn't, but, we started this company into 16, early 17. By 2019, you went from 300 tracked brands in the space, meaning doing over $1 million, to 3,000 in 2 years.
Wow.
So everyone said, this is where we have to play, right? This is the new wave. And when you become that ubiquitous at that point, everyone now knew CBD after the Farm Bill, it's a commodity. So what keeps consumers sticky? Well, interestingly, great products do, yes, but we got really smart on who our core consumer was, right? And what you found was all these brands coming out were to be super cool and edgy and fun and attract the millennials. Well, when you look at population densities and things like that, all the states on the coast where you really wanted to have penetration already had legal marijuana. And so it's not that CBD is the same by any means. It's totally separate. This is all hemp-derived CBD. But the education around what CBD was very high, right? But then they wanted to try, and they were trying a bunch of different local ones because CBD is CBD is CBD. What we got really smart on was understanding, okay, who is our core consumer, right? The type of people that are taking our CBD, who are the stickiest, the best for our business, and that we love to serve, cared about two things. Mission matters, right? Our price points were along our mission focus, which was democratizing CBD. Because at first it was very expensive, and we came out at the gate at a very low price point. It didn't mean quality was bad. We just knew the margins were so good and would get better over the years that we could sustain that. So one was mission. Two was when we looked at our consumer, that age range was 45 plus who used it and who needed to use it in what they were, utilizing that product for in those cases. And so when we started understanding psychographic, demographic standpoint of these individuals, we realized they want a product that they trust, that they care about, that is doing something well, that was reliable, consistent, and they could afford. Great. When we went down age tranches or cohorts, they wanted trial and brand excitement. So a new brand came out, they're leaving. Well, if we're in a business of sticky customers, I want the latter. Okay.
Right.
Now, then we're all fighting for the same people over here on the coast. And I said, but that's a whole part of the country we're forgetting. It's almost like a voting map. Mm-hmm. But there's also a big red part of the country that's scared of marijuana.
Okay.
But what if we also know that influencer marketing at this time was very hot? Well, who are the influencers for the middle of the country? They're not Instagram. They're Sean Hannity, Glenn Beck back in the day. And this isn't a political discussion. Right. This is who is the people who are changing hearts and minds, good or bad. You can make an argument in this portion of the country that no one's paying attention to. And so we then use those insights to try marketing tactics that no one else was doing. And it became one of the most amazing channels for us. We started doing host endorsed radio. So we worked with a media group, the FTC, attorneys to get this to where we could show that we were the trusted brand. I make the joke, we wrote the RFP in the space, right? And we started advertising there. When everyone else would go, I'm not paying for a host that much money to talk about. And I said, if this works, this will be a channel no one else is using. They won't have access to this channel for many, many months. And we'll have a head start getting these individuals who are our core consumers to understand what we believe, why this product can work, and why we're the brand for them. And it ended up working magically for us. So there's the lesson or the takeaway, if you will, is there are very crafty ways if you can really interpret your customer of reaching them without the normal arrows in your quiver of Facebook and Google and things like that. Because we in the CBD industry couldn't use those traditional arrows. And so you're looking at an entire marketing stack that was SEO, affiliate, PR, host endorsed radio, things that most brands today are going, I wouldn't touch with a 10-foot pole. And I'm going, it built our entire business.
Yep.
So, yeah.
It's funny to me how many founders want to skip strategy and just focus on direct response type of results. You know, you're overseeing revenue. You're speaking with founders that need to bring their numbers up. But what you're saying here is no. It was the competitor marketing audit. It was the target audience profiles. It was really understanding why our customers were purchasing. And then from there, we were able to identify channels that CBD marketing is allowed. Like you said, there's workaround for some other channels. A lot of stuff's just ignored. But by working with conservative host endorsed radio, you were able to tap into a very strong, very loyal, very responsive audience around the product. And when they were told, hey, this is consistent, this is reliable, this is safe, this is great, here are the benefits, and I'm kind of just guessing what some of the messaging theme is around, you were able to see results that were off the charts. You weren't fighting for that West Coast, East Coast, millennial excitement. What's the best brand for this month, for this season? You're looking for long-term, strong, lifetime value customers. And that's how you were able to succeed. And that's what you share with founders now is understand your market, understand your audience, think outside of the box, know what's happening inside it, but carve your own path and let the data show you what to do more of.
100%. There's actually this great story, and I'll transition to finance a little bit, especially as we do diligence on companies. And I take zero credit for this. It's actually from and I forget the gentleman's name. He's a GP at Benchmark Capital. So all credit goes to him. I just parrot this back because I think it's a great way of saying it. If you own a sailboat company and you're trying to raise money, most CEOs will talk to you about the beam. They'll talk to you about the mast. They'll talk about the cross stitching in the leather. They'll talk to you about the speed it could go at max wind, like all the things. In shitty wind or great wind, all boats can be treated differently. I mean, they all kind of take flight. So really tell me the wind. Really explain to me the wind, not just how good your boat is, right? And I think that, to your point, most founders or most, I would say entrepreneurs, but most people in business aren't focused on the other things, right? It doesn't mean obsess about your competitors and what they're doing, but try and find these spots, right? Because in the CBD industry, all boats were rising. Why did ours rise asymmetrically? Because we truly understood the wind of the wind. And we knew that we had to build a good enough boat, which we did. We really had to understand the wind, where everyone else was just focused on building the best boat.
Right.
And so I make the joke, and it's the one that he tried to push, like, sell me the wind, sell me the market, sell me what's happening, where it's going, and why you're positioned properly for it. Great products will always rise to the surface.
Yeah. Right.
But truly show me the wind, because another joke I make is, great, you brought a Ferrari, but not one road is paved. Now what? Right? We can't go anywhere. Or we got to go build a paving company.
Right. Wind company, paving company, you need to make sure you have the right velocity, and it's all around that positioning. That's how you win the race, the regatta. That's how you get to the other side of the road.
You got it.
Yeah. I've heard analogies with the Ferrari, with the professional driver versus just any average person hopping in. I like adding the pavement element. That's very smart.
Yeah. We're good at storytelling, hopefully, in venture, right?
Yeah. Well, it's all about
that's also
material.
What most founders need to be good at is storytelling, right? Culture, vision, capitalization. The way you can do all three of those is being an amazing storyteller. The days of speeds and feeds are important, but in most marketing, which whether or not you call it marketing or sales, as a founder, you tell great stories. Make me believe.
Mm-hmm. Did you do a lot of that in finance marketing? Is it able to relate the material and break it down in a few words that capture your audience, and then a longer presentation, but still passes the glance test and is able to get them to move forward accordingly? Was that a key aspect of the finance marketing for you?
Yeah, I think it's a combination of two things. One, um, being able to be creative enough that a due diligence officer will let it go out the door, right? First and foremost, compliance officer, right? I should say, excuse me. But number two, understanding your consumer, and we keep going back to this because it's so important, whether or not it's finance, whether or not it's high tech, whether or not, I mean, literally put your industry in here, name it. We have a tendency as marketers to be too clever or talk over our customer.
Mm.
And I learned a lot about this when we were truly doing conversion rate optimization with big brands at scale. And there's an old piece of data now. It's probably 5-6 years old. USA Today went from a 10th to an 8th grade reading level, and their circulation 10x'd. No one wants to be talked over, but no one will admit they don't understand.
Mm.
They'll just pass. So understand who you're talking to. And it doesn't mean being pedantic. It doesn't mean being insulting. It doesn't, right? Being condescending. But it means truly understand from the words you use, the analogies you use, how clever you are. Not everyone's going to get it. And if you don't truly understand who you're selling to, then you may lose people just inadvertently off of your cleverness, right? So be a little bit more straight lined, make them feel it, make them understand it, and then get more complicated in post meeting, post lead gen, post whatever, right?
Right.
There's an old way of structuring presentations. Tell them what you're going to tell them what you told them. You're reinforcing the thing that's most important for them to take away. And a lot of times we don't do that well, especially in finance marketing.
Like you said, it's all about crafting that narrative, that storytelling. I like to break things down into 3 words. There's a model I've used, 313 method. You break it down into 3 sentences, then down into 1 sentence, and you attempt to make it into 3 words. People can remember 3 words. They may not remember 3 sentences. And if it goes over their head, I find, like you said, they don't understand it. They don't want to move forward. Also, they can't talk about it. And if they can't talk about it, if we're working on beyond Reg D, the 506C accredited investor campaigns, we'll work on retail campaigns. So $5 million, $75 million rounds, somewhere in there, but thousands of small investors. And the motives for many of these individuals is to be along for the ride, to be a shareholder in this, growth stage business, high, performance vertical. They want to be able to talk about that. And if they're not able to, because they don't understand the inner workings, you've lost them. So like you said, I don't want to use the words dumb it down, but that stat you shared with me of 10th grade down to 8th grade is going to stick with me. I'm going to quote you on that.
Well, and
makes a lot of sense.
I'll use your 313 down to what's the most famous tagline in history? Just do it.
Nike.
And there's, I'm sure, a manifesto that we could look up online here that is, 500 words on what those 3 words mean, right? But they were able to get that, and no one questions it. Everyone goes, yeah, I know exactly what that is.
Mm-hmm.
And it's what it means to them.
Mm-hmm. You're able to own it, to embody it. And you're right. It was probably 6 months, maybe multiple years to come up with that saying, and then to keep building into that tagline. It just appears simple.
Mm-hmm.
Huge. Well, Chris, you've already given me so many great notes here, but want to ask you a few questions, want to package some actionable insights for the founders, the CEOs who have tuned in, as well as the marketers and VC industry professionals who are looking to support brand growth. What do you recommend that founders use to grow? What can they test out towards their own marketing campaigns, their own capital raise discussions, their own entrepreneurial journey?
Yeah, so it's interesting. Each of them is very different, right? Not only your audience, but then inside of that question. But I'll kind of sum it up in this. Our tagline from our agency was test, learn, optimize.
Yeah.
There's other ways of saying it, which is fail fast, right? Uh, for us, well, there is no bad idea. There's just how costly it is to actually do.
Right.
And so we used to make growth canvases to figure out exactly what the cost was going to be versus how good we thought the idea was going to be, and how, right? All of the things, right? But don't be afraid to fail. Don't be afraid to test. When you're starting, it's the best time to do it. Don't be afraid to research heavily, especially in marketing. But it's the same thing in finance. We are doing deep diligence on companies to truly understand what's special about them. Everyone loves their children, right? Everyone loves their baby, and they think it's the biggest thing that's ever happened. And it, in a lot of cases, can be. In a lot of cases, it fails because of poor execution. And so I think at the end of the day, it's truly understanding, what are we trying to achieve? Who's the right audience that we need to go after to achieve it, right? To be customers of ours. And then figuring out how to reach them in a cost-effective way at scale. I mean, it's pretty simple in that way. I think, I went through the example of the inch wide, mile deep v mile wide and an inch deep. I think that alone would change half the amount of presentations I see for initial capital, right? I think going through and quote unquote selling the wind, especially in your story, whether or not you're pitching a new customer or you're pitching me or another haircut like me in the venture space to raise capital, make me believe why this is something we need to be a part of. And that's being the storyteller. Sitting down and telling me about speeds and feeds and maths and riggings, I don't know as much as you do, but share to me why this is an industry we need to be in, its potential, and how you specifically are going to change and be a change agent within that industry. And that becomes just being a great storyteller.
Really understanding what you're trying to achieve, who you're looking to reach to do it, how you're reaching them, and crafting that as such a strong story that you're able to describe the wins along with the boat, but that positioning and why whoever it is that you're pitching, whoever it is that you're trying to reach, is able to live into that and move forward.
Absolutely.
Now, what if you're doing all of that and it's not working right out of the gate? I'd say statistically, that's more common than it just all working and you're growing. Everything's just awesome the first month, the first quarter, the first year, what have you. What are the best approaches towards optimization? It could be pivoting, any type of improvement as a whole, but you guys use the word optimize as well. What are the best ways to optimize?
Yeah, so pivoting is absolutely one. When we talk about our space, what's the right time to pivot is a tough one to answer, right? Before we invest as a firm, we want to see what we would call market signals at minimum. Product market fit is what we'd rather see. Meaning, you have clients, customers who are obsessive about your product. It doesn't mean you have to be in massive revenue. You can still be in a beta, right? But if you're going to really understand your customer, you understand what they love about the product specifically. And once you start to understand that, double and triple down on those features, whatever they may be, as part of your selling strategy, right? If you continue to do that and you do not get the response you want towards those things, well, then maybe it isn't a product that needs to be in the market today. You could be too early because, like the Ferrari to non-paved roads example, right? There aren't paved roads yet.
Right.
So that doesn't mean you're wrong. I mean, there's plenty of stories about companies that were 2 to 5 years too early, failed. 2 to 5 years later, a company comes out with the exact same thing, and they're, unicorns now, or what do you want to call them?
Crushing it.
And so there's this level of truly understand, is what I'm building something that people want, people are ravenous for, people will pay for, right? if your strategy is to receive revenue, which I sure hope it is, because that's what we like investing in, companies that generate revenue, right?
Of course.
And really focus there. When you talk about a pivot, what does a pivot look like? What you may find is, I wanted to build the biggest CRM in XYZ space, but you're also ran, but you happen to develop as a feature a specific product that could live on its own.
Mm.
And it was the only reason anyone was using your CRM in the first place. And this could be the worst example in venture history. But what I'm trying to say is there's something there that's meaningful. You just wanted to capture the bajillion-dollar CRM market instead of this small SaaS piece.
Mm-hmm.
That is actually what people want. But you could build that SaaS piece into a smaller enterprise value and find a home for it instead of trying to compete against the large CRM companies. So it's not the original dream, but it still has life. And it doesn't mean you gave up on your vision. You just realized there's something much more meaningful here that we built than anywhere else. And I have both friends and other investments that I made where that happened, and they have great trajectory today. And we're not on those trajectories years ago.
Yeah. It fits in everything else you're saying, inch deep, mile wide, trying to hit 5 different areas. You want to be the best CRM for, whatever company, legal industry, liquor. You were mentioning distilling. And really, if you have a tool, let's say it's a customized follow-up tool, integrating AI. And that's why people are using the CRM, but they have to hop from the other CRM company and the contract there to work with you. Meanwhile, you focus in on that tech. You roll out that product. You build partnerships with the other CRMs now. You could be substantially larger and face far less competition. You could be, the gold standard across all of these other complementing tech providers. But you have to be able to look at the data, zoom out, and see what do audiences actually obsess about for my product? Is there a better way to do this? Because I'm not hitting the numbers that I'm looking to reach on my own, and being able to go to the drawing board, even check ego a little bit and shift the thinking to then recalculate the narrative and find success on a slightly different avenue.
Exactly. I'd also say when it comes to optimizing, and we'll talk about startups for a second.
Okay.
Truly optimizing what you need, the runway rate, the capital, what your strategy is, right? You're going to have a capital partner who's going to help you, right? But everyone wants to raise that bajillion-dollar round, whatever the number is, enter it there, 5 million, 10 million, 15, 20, right? And they're like, if I could only hire 10 more people, if I could only do this, we're going to get it. We're going to be here. What you end up realizing is if you truly optimize the business, you need less capital than you actually think you do. We like to throw full-time employees at problems. We don't like to build new processes for growth. We just figure if we hire another haircut, they're going to make it bigger.
And they're just another person to manage. Building a process, you have to then manage it and ensure that you're managing it to a point of effectiveness. Hey, let me just throw someone at it, but that's more cost and that's not efficiency.
You got it.
Yeah. So what about when you get all of that dialed? How do you scale? You've done this successfully. You've advised on companies, been a part of various organizations to the point of exit. What are the tips? What are the examples? What are the, I don't want to say secrets to scale, but some of the things less thought of?
Oh, there is no specific blueprint. We've covered on some of it, which truly is be obsessive about what your customers, your clients, right, the audience want, and continue to deliver the highest quality towards that. Scale takes care of itself. Figure out within your own product, service, whatever it is, ways to make it, and I hate using this word, I'll go peer-to-peer instead of viral because I hate that word.
Right.
But make it peer-to-peer. I got to give credit, Sean Ellis, the Dropbox crew, Drew Houston. Dropbox when first started, I think Sean was very instrumental in this, being one of the first growth guys, of understanding if you allowed people who are using Dropbox to give a small amount of storage away to their friends, there was this network effect that started.
Yeah.
how boring is cloud storage? How fun was it to get extra storage from your buddies?
Yeah.
Weird, right? But it was one of those where they found out that's what people truly wanted this for. And getting cloud storage was not something that was inexpensive at the time. And you could have your own little cloud here with your stuff. And you could refer it to other people. Like, you were doing people a favor, and it kind of took off this level of peer-to-peer. How do you make that part of your business? What are those hooks that you can start forcing or artificially generating your scale off of that don't cost a tremendous amount of lead gen dollars? And again, we're in the consumer SaaS space, so this is very different, right, than other industries, but they found that insight and they went hard and heavy. And I think every business has it if you can identify it. Mm-hmm. And I don't know that enough people work on the business to truly understand that, as compared to in the business, just to get through the next week, the next month, to hit their quarters, to hit their whatever, to make sure their VCs are off their butt on hitting their quarterly KPIs.
It's the difference of being self-employed or an entrepreneur. You got to break out the time. I've done both, but to work on the business and actually think about it, actually ponder and go through the data, analyze, come up with a few ideas. Some of them are going to be bad. But the one that stands out, as a marketer, I say peer-to-peer marketing is everything. Word of mouth. If my brother on the golf course tells me to check out a product or an investment or something along those lines, it stands out a lot more than an ad. I find a lot of results with advertising or PR or anything along those lines. That peer-to-peer is ultimate. And to gamify it, like you're saying, getting free storage from your friends, takes it to a whole nother level. And then being able to pinpoint, being able to understand the algorithm and the A/B tests and the pockets of performance. So you could say, that's where it is. We're leaning into that. And then, dare I say, be aggressive or at least, intentional with how you're ramping it up from there. That's what determines market share.
100%. Nailed it.
Awesome. And you've done it. You're continuing to do it. Really applaud that. Every time I talk to you, it sounds like you're traveling somewhere different, working on new deals, getting the word out there. You're living it.
Living it. It is the most fun thing I've ever done in my career, because instead of having a few that I get gray hair and, ulcers around, I have 40 that I get to do that around, but I get to hear the story. I get to be a part of it. I do a lot on our deal sourcing team. So I'm fortunate to be able to sit and hear the stories, learn about the wind and the sales and everything else, right? Yeah. And be able to go out and share what our firm's doing and doing differently than the majority of the industry. So yeah, that forces me, if you will, weird word, to travel quite a lot. But I do very much enjoy being out there and being part of the overall entrepreneurial community of people trying to do really meaningful things.
Mm-hmm. I love it. Applaud you for it. You're talking about forced entrepreneurship earlier. Now it's forced travel, forced partnerships, but all towards things you love and get fulfillment out of. Chris, thank you so much for taking the time to do this. I feel like I learned from today's discussion. I put together 2 pages in my notebook of notes here, going to be going over it with the team. If anyone's tuned in and wants to get in touch with you or even just learn more about what you guys are doing, where's the best place for them to go? And what would you like to leave us with today? What are the final words you want to cap the pod with?
Yeah, so solycocapital.com, easiest way, SOLYCO capital.com. My personal account's pretty much on anything is Chris M, as in Michael Van Dusen. That's LinkedIn, that's Instagram, that's all places. I'm very active on those platforms. Reach out. Love to hear your story. Love to hear what you're doing. Love to hear how you're trying to, change the world, if you will, with your company, if you have one. Don't be afraid to reach out. Always interested in meeting new people who are doing really amazing things. But thank you very much for having me. Love what you're doing here. Been a big fan, obviously, for a while before we met. And I think this is great. Let me know if there's anything I can do for you, the community, or anything else.
Thanks, Chris. I really appreciate that. Means a lot coming from you, and want to encourage everyone who's watching, listening to take Chris up on that offer. Highly encourage you to do so. And thanks again, Chris. Thanks everybody for tuning in. We'll see you all next time.